Hello everyone, welcome back to my channel. Today we are going to talk about HDFC Limited and HDFC Bank's merger. We are also going to analyze the quarter 4 result of HDFC Bank, and at the end of video I am going to put forward my point of view of the investment strategy in HDFC Bank. So without any further delay, let's start this video. HDFC Bank is one of the largest private bank in India, and HDFC Bank has a market capitalization of more than rupees 8 trillion. However, HDFC Limited has a market capitalization of more than 4 trillion rupees. So as we can see, both of them are pretty large entity and both of them are part of Nifty 50 group of companies. After the merger, it will be the second or third largest entity in Nifty 50, and it will depend upon the market capitalization at the time of the merger. So if we see the timeline of transaction, then transaction may take around 18 months or so. Now you will have a question whether why it will take so much time. Both of them are HDFC group of companies, so merger would be easy for them. Why it will take 18 months of time? Because it has to take regulatory permission from RBI, CCI, SEBI, stock exchanges. So there are lots of regulatory and government bodies from whom they have to take permission, and the merger should or may be completed by third or fourth quarter of financial year 24. Now you may have also heard the term acquisition. So what is the difference between merger and acquisition? Let me clear. If both the company who are going to get merged, they are large, then it is called merger. So in case of HDFC, both HDFC Limited and HDFC Bank are large entity, so we are going to call it merger. However, in case of this combination, one company is larger than the other and the other company is smaller, then it is called acquisition. So for example, in case of Reliance Industries, so Reliance Industries has acquired so many smaller group of companies such as Savan, which provide music content, Adcast, who is a learning enabler, then Hathway for broadband, then for cable network. So this type of lots of companies Reliance has acquired. So now you should be clear regarding acquisition and merger. So the other question you may ask is, Jatin, why the deal is now taking place? Because both group of companies and both are different entity, then HDFC should have completed this deal, this merger beforehand. Why it is now? So the merger news was 3 to 4 years old as well, but now why they are taking this step, why they are merging these companies, is because of the changes in regulatory requirements. Beforehand, RBI has very loose rules for NBFC, that is non-banking finance corporation group of companies. They have loose rule for NPS, that is non-performing assets, and they are not very strict regarding NBFC. So HDFC was NBFC, HDFC is NBFC at the moment as well. So HDFC was enjoying the NBFC rule, and they have loose regulation, and even if it is top tier NBFC such as Bajaj Finance, they have loose rule for NPA classification. But in the recent time, the upper layer of NBFC now have a tighter regulation. These regulations are as comparable to banks. So now there is no need to maintain separate entity, because they are both going to follow the same rules. and strict regulation from RBI. So that is why they have now going to merge HDFC and HDFC Bank, and this will be beneficial for bank and for shareholder as well. Why? Because if it is in same area, then they can close one branch, and they can utilize the manpower, as well as they can utilize this money from closing the branch in an economical way. They can do a business, and this will be a more streamlined process. If there is an HDFC limited branch, then they are in a rural area and there is no branch of HDFC Bank, then they are not going to provide the banking services to this rural area as a HDFC Bank. And if they want to provide banking services, then they have to open a separate branch of HDFC Bank. But in case now after merger, HDFC Limited will be HDFC Bank branch, and they can provide the banking services. And if there is two branches of HDFC and HDFC Bank. Now let's move forward to HDFC Bank's Q4 result. Here is the financial result of quarter which ended in March 2022. Here if you can see, these numbers are in lakhs, and if you see, the first interest earned is in March 2022. It is the quarter ended in March 2022 is 33,44,872, which is more as compared to the previous quarter, which was around 32,46,000, and it is also more than the same quarter of previous year, that is of 2021. Now if you see, then total income, and that is the third row, then it is 41,08,578, which is more as compared to the previous quarter and as compared to the same quarter of last year. So here you can see the interest earned or profit or income is growing on quarter basis as well as year on year basis. But due to the fourth row, you can see interest expended. It is 14,57,598, which is more as compared to previous quarter, and way above than the quarter of last year. So due to that, the total expenditure is 24,72,877. Obviously this is more than the last quarter and same quarter of previous year. So due to the more expenditure, the operating profit has reduced. Due to this, the profit is reduced, and net profit, if you can see, after the 14 row, if you can see, then it is 10,05,518, which is less than the previous quarter. And due to this, the EPS, if you can see, earning per share, diluted EPS is 18 now, which is less than the previous quarter. So ideally, when you want to analyze any company, then you should see the year on year basis. You should analyze company on year basis, because due to any problem, suppose corona or any other problem, the quarter on quarter result may go down. But if you see a year on year growth, then since last 5 years, if you see of HDFC Bank, then it is growing at more than 15%. If you see here also, the net NPA is only 1.7%, 1.17%, 1.17% as compared to last year and same quarter of the last year as well as previous quarter. They have reduced their non-performing asset. They have managed their bad loans pretty well. Now if we can see the stock price at the moment, then stock price, if we can see the 1 year chart, then it has given minus 3.32% return in 1 year. So definitely it is underperforming the Nifty 50. Let us see the 5-year return. Then 5-year return is also 75%. So it is not bad, but it is still underperforming the Nifty 50 return. And if we can see the PE ratio, it is around 20%, less than 20. And recently ICICI has posted a stupendous result, but HDFC Bank has posted mute results. So HDFC Bank's share price may underperform the banking sector, but on a long run, from the next quarter or from the next 2 or 3 quarters, it can pick up the space. Obviously, no one can predict the stock price. If you can see, the HDFC Bank has also posted also recommended a dividend of rupees 15.5 per equity share, which is highest in last 7 years. So now what should we do? HDFC Bank Limited has definitely has really good growth since so many years, and if you see the maximum chart of 22 years, then it has given a good return. And if India wants to grow, then they have to, for large company or medium company to grow, they have to take loans from the bank, and these are the banks which are going to give loans. And definitely I think HDFC Bank is going to grow in the coming future. From my point of view, this is really a good start for an investment. I have already invested in this bank at a lower price. Reduction in share price, then I will definitely invest more in this company. This is not any suggestion or any recommendation. You are responsible for your own money. And with this, I will like to end this video. If you have learned something, if you like this video, then please like this video and share and subscribe to my channel. Thank you very much.